Hey folks, welcome to the rate update with Dan Frio. Today is December 27th. We're a week away from 2022. So if you didn't buy in 2021, what's the outlook for 2022? If you were postponing refinancing because you're in a forbearance, maybe you're just like, hey, I don't know what I'm going to do. Should I lock in at today's rates? We're going to go over the 2022 playbook next, so don't go away. So in 2022, I think the highlights are going to be basically what are rates going to do, and basically what's the Fed going to do, and what's the Omicron or what's COVID-18 going to do, and then what's up with housing? Is there going to be more houses? What's the cost of those houses? Supply, demand, and so forth. So let's see what CNBC's focal point is. Then we come back. I'm going to wrap that up and tell you what my thoughts are. So don't go away.
Demand for homes remaining strong in 2021 as mortgage rates remain historically low. But what will next year bring? Diana Olick joins us now with her 2022 housing playbook. Diana.
Well, Dom, front and center for 2022 will be rising mortgage rates. The Fed has made it clear it will pull back on buying mortgage-backed bonds, and that'll mean higher rates. The average on the 30-year fixed is already about 40 basis points higher than it was a year ago. The realtors are now saying that will result in fewer sales next year. But home prices, they will continue to go up because supply is just so lean. The home builders are trying to ramp up production, but they continue to face higher costs for materials. The price of lumber is rising again, off its high of last spring, but now twice the price it was in mid-November and well above pre-pandemic levels. Steel, wallboard, and other material prices also considerably higher. That'll keep prices for newly built homes rising, already up nearly 19% from a year ago. Home buyers could also face even stiffer competition from investors as the single-family rental market soars. The number of homes built for rent just hit a record high, and investors just continue to pile in.
The rental market is actually stronger than the for sale market right now. The rent increases are something like I've never seen before in my life. So we are definitely pulling forward a lot of household formation.
Single-family rents are now up nearly 11% from a year ago as potential buyers who are getting priced out of the market continue to rent. Dom?
All right, Diana Olick, thank you very much for the 2022 housing playbook.
Okay, the buzzword everywhere is what rates are going to do. Well, and what's housing prices going to do? I don't know. So that's what we're going to talk about briefly here, and we're going to talk about it all week. Okay, so today we're going to talk about one of the biggest things Diane Olick just talked about is rates. What are rates going to do? So guys, that is really difficult to follow. So what I do this every day for you guys out there. If you're a realtor, please reach out to us. We'd love to hear from you. Maybe we want to do some co-marketing. You have some questions. Maybe we can do a YouTube live, answer a lot of questions that your buyers have. If you're a home buyer, ask me questions. Put down below, what do you want to talk about? One of the things that just came up recently that I want to talk about is cryptocurrency. Can you use it? Can you use it to qualify? Can you use it as your down payment? Can you make mortgage payments with it? You might be surprised there. And then on the housing front, what's going on with prices? What do we anticipate for 2022? Supply demand. So we're going to watch the supply and demand charts, but one of the big things behind the scenes is what's labor costs doing? What is supply chain doing? What is the cost of lumber, steel, all the components of the houses doing? That's what we're going to dissect today. But right now in the morning, we talk about what mortgage rates are doing. So let's get on to that. What we follow in that field is we go to what's the MBS is doing? What is an MBS? Okay, that's the one reason why people follow me is if we want to see or have a crystal ball on what's going on with mortgage rates, we have to follow the MBS market. Okay, so if you like a stock and you're like, hey, I want to follow this stock, what's going on with it? Is it a good buy? Is it a good time to buy? And so forth. You monitor that stock and you watch it. That's basically what we do with the MBS market. The MBS market means mortgage-backed securities. It's a bond that trades on Wall Street that is the biggest component or factor in your mortgage interest rate. Okay, so let's dig down into that so you understand this, what we're going over. Okay, so The goal for 2022 is really to get everybody informed in the housing market. Is there a crash? Is there going to be a crash? Are rates going to spike? Is it going to completely deteriorate the housing market? That's what we're going to dissect this week. But right now we're going to go over what are rates going to do this week. Well, this is our crystal ball. We look here. This is the one area that we follow. Look up mortgage-backed securities. What is happening in the mortgage-backed security field? Okay, so we follow this number right here. It says UMBS. That is the mortgage-backed securities. Okay, so this number, when it's black, it actually means it's up. When it's red, it means it's down. Okay, so we're going to focus in on right in this area right through here. Mortgage-backed securities, 2.5. Okay, I won't go over that. I might do a separate video to explain that. It's really simple, but I'm not going to go over it right now. The 30-year MBS is trading up 6 basis points. Okay, what does that mean? When any bond, if you're looking to buy a bond, when the price goes up, the yield goes down. And in this case, it's a mortgage bond. So when the price goes up, the yield, the mortgage rate goes down. So we like when the numbers are going up. Okay, we don't focus on the S&P 500. We don't focus on the 10-year. You still have people going in watching the 10-year saying, oh boy, 10 years down means mortgage rates are going to whatever. It doesn't. Okay, guys, it doesn't. Okay, so let's explain that. So what we want to follow right now, well, let's go through and look at the chart for the last couple weeks, months, and quarter. This is basically what happened in the last quarter, and I'll just do it in a little nutshell. Down means rates went up. Up means rates went down. Okay, so it's an inverse relationship. We've had some stability right into here. All these lines through here, they serve a purpose, and there's names for it. These lines that go straight across are what we call Fibonacci levels. Okay, just think of these as bumpers. If you're taking your kids bowling and you put some bumpers on because you don't want them to fly off the lanes. Well, these Fibonacci levels are basically, they should trade that way. So that means when something's trading, it should hit that level and stop. Hit the level and stop and bounce between that. You can see over the past month or two, we've stayed in that area. So that's a nice trend lines, okay? So the next thing we see is all these other squiggly lines through here. So what these are going to do is these are representing different milestones or different trends. So the first one we want to see is, I'll just go through here. I'm going to get rid of the 200 right here to make this a little simpler for you to break these down. Okay, so let's get on to this. When you're looking at this, you're going to see a 100 DMA. What does that mean? Well, it means 100-day moving average. So this blends it out and it tells us where the 100-day moving average is. It's right here. Then we see the black line right here. It's the 50-day moving average. And where we're going to find that is right down here. And then we have the 25-day moving average. Where you're going to find that is right down here. In a normal market, folks, we should be trading in these ranges. Well, you can see we're way off the 100-day. We're pretty far off, not too far off the 50-day moving average, and we're right at the 25-day moving average. I continue to say I think we should be trading at the 102.4, and that is right here, right on the dot for the 25-day moving average. I still think that's where we're going to get to. Probably not this week because it's a holiday week and trading is going to be light, short week, and so forth. So we're probably not going to see that this week. But that's the purposes of all these lines and triggers and charts and everything. Let me do this for you. So just call us and say, hey, Dan, what do you think's going on? Here's my rate. What should I do? I got a quote from somebody else. Is it a good rate? So forth. So that's what we're trying to educate you on and give you options. The next thing is the economic calendar for the week. The only thing we have going on today is the 2-year Treasury auction. We're probably not going to see anything major in that area that should affect our markets, which is the mortgage-backed securities market. To Tuesday, we're going to see a lot of things that's pertaining to the value of homes. Okay, so you're going to see the Case-Shiller index year over year, so forth. On Wednesday, we're going to see how much demand there is for housing, and we're going to see the sales number or pending home sales. And then on Thursday, we're going to start seeing some job numbers or jobless numbers. This is people that continue to file jobless claims and initial people that filed a claim. And then on Friday, we have the market closed. And then let's look at today. Where are we so far today? Intraday, what's the charts look like? It's nice. It opened up, it rallied up, and we're staying up at that top level. We do have a little red candlestick right here. Don't know if that's going to hold, but like I said, it's going to be a short trading week. A lot of non-show ups on Wall Street to buy bonds or sell bonds. So I don't really think this is going to be a major week one way or another. So that is it right now, guys. I need your help. I need you to do me one favor. I need you to help me get to 19,000 subscribers. Okay? Please, if you would, amuse me. Give me a thumbs up. Subscribe down below. Hit the bell every time I post a video. You get an alert. I'd love to hit 19,000 by year end. That was our goal, and we might just hit it. We're about 120 away. So only you guys can help me. So that means we need about 20, 30 a day. We should get there, but a lot of people are probably